Gold has been one of the top performing asset classes in 2024, and it will get even better towards the end of the year when all the investment funds need to start buying gold to show it in their year-end reports to their investors. Smart investors and traders need to be invested in the gold and precious metal sector in 2024 and in the coming years. But did you know that the ultra popular gold mining stocks are actually one of the worst investments that you can possibly take in the precious metal sectors, except for one time period? And when that time period hits, then you can make multi-bagger and 10-bagger returns. We will talk about it now. Welcome to Hot Trades of the Day, your daily show that focuses exclusively on swing trades and trading ideas for the coming days and weeks. No macro data, no hectic day trading, just swing trades that make us money and leave us more time to enjoy our lives. And that's what it's all about. So, since yesterday was Labor Day and the market was closed, that gives us a chance to look at the gold sector through a longer time frame. Now, we all know gold broke out to new all-time highs this year. A new gold bull market has started. But did you also know that the ultra-popular gold mining stocks are one of the worst investments that you can possibly take in the precious metal sector, except for one time period? Let me show you what I mean. So here in the purple chart, that is the gold price. And down there at the bottom, in the green uptrend, that is a chart of Newmont Mining, one of the biggest gold companies in the world. Look at the underperformance of Newmont compared to the gold price. What a disaster. Since 1998, the stock of Newmont has gone up 32%. Okay, you need to add dividends to that. Let's be generous and say it's been 60%. At the same time, gold has gone up 627%, so 10x more than Newmont. Now, you might say, well, okay, Daniel, that's Newmont. I mean, they're not well managed, which is true. Okay, let me show you another blue chip, Barrick Gold. Same thing. See the purple line? Gold price. See the stock price? Barrick since 1998 is actually down 26%, while the gold price is up 627%. That is crazy insanity. So, where do we stand with gold? Well, you know this is the long-term scenario. We had a gigantic uptrend that went till 2011. Then we had a 12-year-old consolidation, and we broke out to new all-time highs this February. Now, so all the long-term uptrends, the bull market is in full effect. There's no reason to doubt it. But we also see on the weeklies here, after the strong push that we have seen since February, now there's a consolidation phase brewing, and that is completely normal and healthy. This is a buying opportunity to get in on gold, and the institutional investors will grab it because they will need to show gold at their year-end reports to their investors. The same goes for the Junior Gold Miners ETF. Now, look at this. On a weekly base, we had a gigantic jump up in August, and now it is correcting all the way down. I predicted it a week ago, recommended a short. We are really good in the money on this short already. Where's the target zone? The first target zone would be here. This gap close around 42.60. But where you want to really get long is once we hit this supporting zone that the ETF GDXY has tested 1, 2, 3 times successfully since April. This runs around $40 to $41, and once we see a reversal signal there, that is where you want to start buying the ETF GDXY for the junior producers. Now, why is that? Because I told you, while the long-term performance of the mining stocks is disastrous, there is a special golden, see the wordplay there, window where the mining stocks become super popular and go supernova in the stock market, offering multi-bagger and 10-bagger returns. It needs to be a special scenario, and this scenario is about to develop now. This scenario consists of an established bull market. We're about to get there. Okay? You have to remember, I showed you the long-term chart. We had a 12-year period where gold was basically dead. So the institutional investors, a lot of the retail investors, the hedge funds, none of them really have gold very, very high on their investment list. Yes, it's gone up a little bit. It's broken out to new all-time highs. That's cute and everything. But we're talking about a real bull market. It takes time after 12 years to change the mindset and say, oh, we have a new gold bull market. I need to be in this. That just takes some time. And I think this will hit when gold breaks 3,000. That's not far off. A lot of analysts predict this will happen next year. So do I. So that's the first scenario. So we have a positive momentum. We have a positive sentiment towards gold. Then we need to be late cycle. The cycle where investors, especially retail investors who are heavily invested in the junior producers and the explorers, are willing to take the highest risks because they want the fastest and highest returns possible. We have this right now. We're clearly in a late cycle of the current bull market run. We also need to be in a situation where the prior popular investment opportunities that made fast returns and offered fast returns have exhausted themselves. So the retail money, the fast money, is looking for new sectors, new areas. Hey, where are the new multi-baggers? This is also happening right now. You see AI is slowing down, the AI stocks, the chip stocks, they're not performing as well for a month now. Now they'll do fine, that's okay, but in NVIDIA in the next 12 months won't go up as fast as it did in the past 12 months. We're not even talking about SMCI, they have completely different problems. So now these retail investors will start looking around and say, hey, where's the next hot market? And that will lead them to the gold miners. And once that spark is lit in the gold market, in the gold mining market, which is a small market under the big blue chip companies, and all these retailers pour in, and then the hedge funds jump on top of it, at least in the junior miners that are big enough and liquid enough, that is when you see the multi-baggers, the 10x returns. And this time period will start next year, 2025, 2026. That's when you want to be in the miners. That's why weakness in the mining stocks is a buying opportunity now. Weakness in gold, the commodity, is always a buying opportunity because we are clearly in a new gold bull market. Well, that's it for today. Have a great trading day. Remember, you don't need to be in every trade. You just need to be in the right trades. And don't forget to live. Talk to you tomorrow. Bye-bye.